Soxl is sitting at a really interesting point because this ETF usually tells you a lot about overall sentiment toward the semiconductor sector. After a strong run higher, we've seen a pretty meaningful pullback, and now the question becomes whether buyers are simply resetting the trend or if momentum is beginning to fade across the entire sector. What I like is that the bigger trend hasn't completely broken down yet. Even though we've seen aggressive selling recently, buyers are still trying to defend key support levels. That's encouraging, but I don't think it's enough by itself. I still want to see stronger follow through before calling this correction complete. The first resistance I'm watching is the most recent swing high where sellers regained control. If price can reclaim that area with improving volume, then I'd become much more confident that institutions are rotating back into semiconductor names. Until then, I think every rally deserves a little caution because leveraged ETFs can exaggerate both gains and losses. On the downside, if current support fails, then I'd expect another wave of selling before a more durable bottom forms. That's exactly why I'm not interested in guessing. Leveraged products reward discipline, and chasing every bounce usually creates more problems than opportunities. For me personally, this remains one of the better ETFs to watch when semiconductor momentum starts improving again. The setup isn't bad, but confirmation is still missing, and that's enough reason for me to stay patient. I'd rather buy after buyers prove they're back in control than try to predict when they'll return. Right now, my bias is neutral with a bullish outlook only if resistance is reclaimed. Until that happens, I'm keeping this on the watch list and letting the market make the first move. If you want my exact execution framework and the setups I'm personally watching before market open, it's inside the Patreon, link in the description.